This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. I am Cesar Delgado on today for Back Roads of Illinois. We were bringing our coverage for the NAFTA convention in Kansas City. We will see you in KC. I have some barbecue at the convention. We will talk about the cattle markets and hogs markets before we go to Kansas City from NAFTA convention. We were talking about it with Joe Koomia from Koomia Koomia evlk Trading. I'm talking about the world supply and demand report on Friday from the Department of Agriculture with Tyler Shau from agmarkets.net. This been Back Roads of Illinois. We will talk about the cattle markets and hogs markets before we go to Kansas City from NAFTA convention. We were talking about it with Joe Koomia from Koomia Koomia evlk Trading. Hey Joe, how are you? And welcome to the show.
Hey, thanks for having me on today. I'm well, and thanks for letting me join you today for this show.
Joe, let's start with our conversation about your thoughts with the cattle markets with these prices for the last couple months. What is your position on the fundamentals on the feeder chart?
Yeah, great question to start there. Part of me wants to kind of think like prices. Every seems like every day we're kind of knocking out about 8 or 12 dollar trading ranges, especially in the feeders. So it's been a extremely wild and volatile type of a marketplace, and today is kind of no exception. Again, to that, a lot of moves happen with some headlines that continue to kind of devour the market to a certain degree as well. And the AI traders and the algorithm type traders kind of will feast off of that pretty good from day to day, especially with the wide trading ranges that we have available in this marketplace. So yeah, prices have been good. They've come down quite a ways. We've had a little bit of a black swan event happen into the marketplace here several weeks ago with Trump wanting beef to come down, and ever since that day, it's been just hightailing it down to them for the most part to a certain degree. So it seems like when you have high prices, especially in cattle, when you have something that's just a little bit more of an uncertainty type of a situation, that tends to bring the market back down. So he announces the deal to get beef cheap. So then all of a sudden everything gets thrown in the front as far as hey, is the border going to open for the feeders, which we don't have any detail on. If we want cheap beef, what are we going to do? Do we take down some of these tariffs? And that's kind of what we dealt with over the weekend, last Friday in the afternoon. Trump did announce that he was going to lower that reciprocal tariff deal. Which is just the 10% that he put back on a few months ago or back there in July. And that's not only just for Brazil, but also for Australia and New Zealand. So that's why we kind of had a rough start here this morning. But back to the other question about how the charts look for the feeders. I mean, it's wide daily trading ranges. We have some gaps above us that the market is pretty kind of just dead in the water, not wanting to go and backfill those necessarily. But the chart has kind of made a spike low on Friday. Didn't make a new low here today, so that was you guys a little bit of a technical support area with Friday's last lows taking place there. I think that's why you had a little bit of a courage of my technical buyers to probably buy it today since we didn't clear that out from Friday. Otherwise, the overall trend is down here for the short term there. So the bulls have some work to do, especially on the chart wise. We can look at the cash feeder market. That's taken a little bit of a hit as well, but that continues to be well over the board price. November does go off here on Thursday, but you had some of these other deferreds. March in April from 18 to 20, 20, $30 in some cases difference between where November is at compared to where their month is at. So it's a severely discounted market there as well.
What is your thoughts on the technicals buying in the feeders?
I think we just you found a little support there from Friday today because we didn't go and check out those lows from Friday at all. So I think that's what signaled some of these day traders to kind of come in here and the big severe discounts that we have in place there as well.
How is your thoughts on the supply and demand for beef? But we were looking for the holidays. What is the technical aspects for supply?
So it's a great question to kind of get back to the basically the meat and potatoes of this marketplace. And yeah, our supply is still extremely tight. Our kill numbers, I don't have them in front of me here necessarily, but still big. Big kill counts compared to what we had last year, killing 40 to 50,000 less, which tells you what we kind of know already with this big cycle of the cattle supply that we do have. So supply remains awfully tight, and we still don't have any AOK from the border to be reopened either. So it's the tightest numbers we've ever had, and every day is the same thing. It's the tightest numbers we've ever had. Our demand situation is still looking really, really good. You're seeing some headlines out there that say next spring we're probably going to see some $10 average ground beef. I don't know if that's the case or not. That seems to be kind of a bold statement to say the least about something that's out of our control if it's going to be there. I mean, if we knew that, we would know that already. But our demand is extremely good, and it has been that way basically since COVID. That has kind of opened the door for people my age and even younger to understand that we can go out to a Costco, to a Walmart, to your local grocer, and look for deals and shop around for deals for New York strip loins or ribeye loins, and yeah, it's a big price tag right away for that. But you can buy quite a few of those compared to going out to eat all the time. So I think that's where demand backbone still stays pretty good. And we got the holiday session kind of coming right around the corner here. Yeah, Thanksgiving, and then we're going to be diving into Christmas and New Year's. So we're kind of getting into a good part of the year where beef is kind of front and center too.
Do you have some concerns about the kills numbers about the labor problem, Joe?
Not necessarily. I don't think that it's a tight supply, so I don't think our labor is really going to be a whole lot of an issue. That was some of the stuff that we talked about maybe at the beginning of the year, but it seems like that part of the scenario is kind of off to the wayside here a little bit.
What is your final thoughts about the cattle on feeds report, Joe?
We're finally going to have one. I think we only missed one, but it seemed like it was quite a bit of time there where we didn't have a whole lot of government reports at all. So it much like last week Friday, we saw some numbers for grains, which is nice to kind of see. So this Friday, we're kind of ramping up to see an on feed report there too, and kind of talking with the questions we had earlier today too about supply. I mean, that doesn't change overnight by any means. So I do kind of wonder in the back of my head that this Friday with the numbers, I wonder if we kind of can finally get back to more of a fundamental basis in this marketplace where we can trust the numbers and kind of move on from there, and maybe finally just get some detail on if this border is going to be open, and kind of get some of that uncertainty behind us, and then we can look at Friday's numbers and say, well, wait a minute, did we need a correction in this marketplace? Probably so. And it's not how we wanted it ordered necessarily, but we can look at these numbers, expect the placements to be tight as well. So hopefully that just gives us a little bit of a backbone on our fundamentals in the supply situation.
Thanks, Joe. I enjoyed our conversation.
Yep, thanks, Caesar. Thanks for having me on today.
Joe Koomia from Koomia Koomia, evlk One Back Roads of Illinois. I'm talking about the world supply and demand report on Friday from the Department of Agriculture with Tyler Shau from agmarkets.net. Hey, Tyler, how are you?
I'm
Yes,
doing
it's
good.
almost Thanksgiving. That's right, Tyler.
Yeah, it's coming up. Hard to believe Thanksgiving is just about a week and a half away, and 2025 is on its way out. So it feels like this year's gone faster than any year prior, which could be a good thing, I guess.
What is your favorite foods on the holidays?
Uh, Same that it is every day, beef.
Coolant sport for my food. Coolant sport for my food.
So,
Okay, Tyler.
yeah.
What was your thoughts on the world supply and demand report on Friday?
It told us what we thought maybe we'd see in beans. Actually, kind of maybe surprised us a little bit on soybeans. They lowered the yield. Our group kind of thought maybe that would stay about the same. We saw a reduction in soybean yields. Not a major reduction, but I think they took it down to 53 bushels the acre, took production down. They did come in and lower the ending stocks on old crop beans a little bit. So the production loss wasn't that great, but you got ending stocks, new crop beans at 290 million bushels, 10 million bushels lower than what we saw in the September report. Should have been friendly to beans, and yet soybeans traded down 24, 25 cents. I think more of that came from the fact that the USDA also dumped some flash sale data, and notably missing was China. There were a few sales which actually got corrected lower this morning. So minimal sales of soybeans to China over the last several weeks, which a lot of people thought maybe they were coming in buying some. And then today, the soybean market erupted and went up 32 cents, erased all the losses from those days. So that was a good problem to have. And on the corn side, they lowered yields slightly, not nearly what a lot of analysts were expecting. That was pretty negative to the corn market. And I think probably continue to see, I would guess as we move forward, we'll see that yield come down as we were kind of thinking. The big question mark we had, Iowa and Illinois, they had very, very large state yields. I can maybe get behind on Illinois being as big as what the USDA's got it pegged at right at the moment. However, I'm questioning maybe some Iowa yields, just the producers we work with. It's hard to believe that we will see Iowa be 2 bushel per acre higher than the 2024 crop. So I think there's still some question marks moving forward. Had some people ask me if I thought maybe the highs were in, and I would say definitely not, just with some of the uncertainty and some of the demand that's coming back into the table.
What is the core numbers on the report from Friday, Tyler?
The corn numbers. Well, I think I had it up and my computer crashed right before we talked. So give me just a break, a minute to get to the actual report. The yield remember, was like 186 point something. They just lowered it slightly. They also came in and lowered the um, exports, and that really created kind of some changes in the market. So on the corn balance sheet, what you ended up seeing was a yield of 186. That was down from 186.7. We also saw the exports actually climbed. I believe I misspoke. They pushed exports up above 3 billion bushels. That would be a monster crop to export. We were at 2.975. We're now above that level. But the big one was old crop corn saw about a 200 million bushel increase in ending stocks. We were looking at like a 1350. It came in at 1532. So you added quite a bit of ending stocks or beginning stocks into this new crop. Even with a slight reduction in yield, it wasn't enough to make up for that increase, even with the exports. And you see ending stocks above 2 billion bushels. The big question mark, the other thing I think you've got to look out for corn is they got food, or excuse me, feed and residual at 6.1 billion bushels. That's pretty lofty at 6.1, considering in 24-25 feed and residual is at 5.4 billion. So we got 500 million more bushels of corn going to feed and residual. Now, some of that's just going to be corn bushels that get lost because of a large amount that's probably piled on ground or that's going to get rotted, whatever. But that's an expectation that a lot more corn is going to go into feed rations. I get the poultry numbers are large, or we're rebuilding some of those poultry herds. We are hearing some instances of some bird flu where they're killing off some birds in some barns in Michigan and the like. So we'll have to keep an eye on that. That's going to be a lofty target. So my expectation is if they continue to come in and lower yields some of that will get offset by decreasing feed and residual moving forward.
The computer did decide to take a break for today. It will be ready for Thanksgiving break. Of course, wait and see. The yield estimate was up to 188.4 on August. What is your position on the corn yield on January?
Right now, I would say it's probably lower than 186, where the USDA just came out. Our ag market guess is probably in that 182, 183. We'll have to see. I mean, both of those would be records. Last year was a record yield, 179.3. So I realized it was a good growing season. There was some disease pressures in some states that pulled yields down. There's some other states that did really good. So at the end of the day, it's a big crop. We know that. And that's why I think producers need to be looking at how do I reward this rally we've seen moving forward.
What is your position on the corn markets going forward?
Well, I mean, fundamentally, I would say it's I would just echo what I just said. You need to be rewarding this market. It feels like we've rallied quite a bit in the face of negative fundamentals and bearish fundamentals. Your cash grain guys will tell you that. The commercials will tell you that. But at the same token, we just keep moving higher. And one of the things, the trend is your friend, and you don't want to fight the trend. A lot of producers fought the trend when we were going lower, didn't want to believe that it would continue to go lower. A lot of those producers now we're pushing higher, and they're worried about low prices now that they've happened, and they kind of want to make sure they're doing something. I'm fully on board with doing something. Buy some puts. If you do sell it, look at reowning with some type of a call strategy. But I'll reiterate that the trend right now is for higher prices, and I don't really foresee any reason right at the moment that changes that trend as we move forward. I think a lot of eyes now are going to shift to South America, so we'll have to watch that weather. I'm not going to call it threatening. I'm not going to call it great. It's just, it is what it is. It's early November. Tends to not have a huge impact on final yields down there, so we'll have to watch it as we move forward.
We have some news story about some of tick in the meat case. Yeah, it was in mainstream media last week. Could you give me some thoughts about it?
I'm assuming you're talking about the I can't think of the name of the tick, but the tick that causes humans to not want to eat meat, makes them sick.
Yes.
So yeah, I don't know a lot about it. Um, alpha gal syndrome is what the actual symptom or what the meat tick disease, I guess what it's called. It's triggered by a bite from a tick. I think the tick's the Lone Star tick. I'm in North Dakota, so I don't really have to worry. Well, I hope I don't have to worry about it. I guess of all the things that I think would be would I would hate to get, it would be alpha gal syndrome and not being able to eat red meat. But ultimately, what happens is eating red meat, as simple as I can make it, makes the person sick. They don't even want to eat it. And I've read of quite a few people that have gotten it. I don't know much about it outside of that, just because of the fact, like I said, that we live in far enough north country that I don't think the Lone Star tick exists up here because of the cold winters. But I do know in the southeast and some southern states it is a problem, and it's something that yeah, I think the it would be very, very bad for the protein industry if there was an outbreak of that Lone Star tick and more people got alpha gal syndrome.
How are the fundamentals on February cattle markets for today?
Fundamentals haven't changed, and all this stuff that's gone on with the big shakeup in the cattle markets, we still have tight supplies. Um, we're probably facing the tightest on fat cattle as we move into that February timeframe, just because you think about the lack of breeding females producing calves over the last several years. You think about the lack of Mexican cattle that have not been coming across the border most of the spring and all summer. And that just gets us to this point where there's going to be fewer and fewer animals that are ready to be killed and harvestable. And so I think that is something we got to pay attention to.
Do you have some final thoughts about the fundamentals with these grains? We were going to be in the holidays.
Yeah, fundamentals, like I said, there's really becoming two clear camps, in my opinion, in the marketplace. There's the fundamentalists that are really focused on the supply and demand tables and all that good stuff, and trying to warn people that markets have gotten too overbought and you need to be selling it. And I do think that they are right. If you're a producer that hasn't sold much in the way of beans, corn, this is the best opportunity you've had in the calendar year 2025 to get some price. Go ahead and do it. I also think, though, whenever the fundamental crowd is screaming, prices are too high, and the market keeps going higher, there's something the market is catching a sniff of, or that some of the market participants see and believe in it strongly enough that they're trading it and they're buying it, and I don't think you can ignore that. And so we're at one of those inflection points where I strongly feel like you need to be doing something, whether that's buying put options, cashing in some grain if you need some cash flow. If basis is really good in your area, I think it makes sense to go ahead and take advantage of the rallies that you've been given, but also take a look at ways to re-own the futures in case we do continue to charge higher and something really has shifted fundamentally. A lot of times we don't know about it until it's out there and it's too late to trade it. So we've been a fan. If we're making bean sales, we're buying some call options or some call strategies, or we're at least buying some puts to put under it. Corn, kind of the same thing. Fundamentally, you've got enough corn to go around, but demand is really, really strong. Technicals maybe say a little bit different. And so we're rewarding it. We're taking some risk off the table, but we're also going ahead, depending on what percentage the producer sold, we're coming back in and re-owning some grain.
Thanks, Tyler. I enjoyed our conversation, and I have some barbecue in Kansas City for annual meeting of the NFB.
You bet. Enjoy that KC barbecue. Um, Jack Stack, that's the place to go.
Thanks. Again.
You bet.
This is Tyler Shau from agmarkets.net. I will see you in Kansas City for NAF convention. I am Cesar Delgado. You have a great day.